Of Boeing down nearly 4% in the session, the Dow managing to rally despite that, and the stock is down nearly 40% this year. For more on the strike and how it will likely impact the company, let's bring in Ken Herbert. He covers Boeing for RBC Capital Markets. He's got an outperform and a $220 price target. Ken, how long have you had the outperform?
Yeah, hi, good afternoon. So we've had the outperform since for about a year, since the fall of last year, when obviously it looked like things were getting better from a delivery standpoint on the MAX, and the financials were on a better trajectory, certainly, than they're on today.
But of course, the major incident was this Alaska Airlines incident. Correct me if I'm wrong, late December, early January. Why no reaction at that point to the seriousness of what's transpired, both from regulators' point of view, which I think charged the company with a crime, and from the point of view of sort of frustrated shareholders who just think the company has one challenge after another?
Yeah, so obviously, it's hard to predict how these events would play out and the confluence of events we would see through this year. In our view, the Alaska incident was incredibly devastating and unfortunate. We think there's been other issues that have surprised us as we've gone through the year. And as we sit here today, we feel like the setup still remains positive, obviously, or we'd have a different view on the stock. As we get through now under the new CEO, can get through the labor issues, and the strike ideally helped to shore up the balance sheet a little bit. And our view is the strike will be relatively short-lived. We still like the near-term setup as we get through some of these negative catalysts, and should see investor confidence improve on the stock here moving forward. Obviously, a few issues here still to work through.
What are those short-term catalysts that you see contributing to a positive setup for this stock? Because for a layman like me, it's hard to see them.
Yeah, great question. You got to keep in mind the backdrop in terms of airline financials, in terms of traffic demand, remain very healthy. So we think production rates on the most important programs at Boeing, whether it be the 737 MAX, the 787, have significant room to improve over the next 1 to 2 years. We do think you're at sort of a trough right now, or not a trough, but you're looking at a situation where very limited downside risk on those key programs. We also think there's significant opportunity to improve the execution and performance at the defense business. We think the company is well positioned coming out of the strike to maybe take some steps with equity or other measures to improve the balance sheet. So we do think you've got a very strong demand backdrop. You've got airlines remaining in very good health financially. You've got a very good backlog. You've got production increases that could be substantial over the next couple of years, which should all contribute to what should be a very nice inflection in free cash in 25 and 26 and later into the decade.